Well, Asian markets are more or less flattish. The Japanese market, in fact, was flattish. Remember, all eyes now are whether or not President Trump and Xi Jinping, they can call a truce and, in fact, ease world trade tensions. For the time being, the Nikkei is as flat as can be. The yen has shown some strength as well, which is not very, very good news for an export-oriented economy. But let's pull up the other couple of markets. The Kospi as well is holding mildly in the red, and the Straits in the Taiwanese index, that in both those two markets just opened up. The Taiwanese index, in fact, a relative outperformer, indicating a gain of around 0.5%. Remember, for the Nifty, we're coming off a splendid series. It's the best series we have had since March 2016. But for starters, it's indicating, let's pause a bit. It'll be more or less flattish to kickstart trade.
Well, yes, and as you mentioned, all eyes on Argentina as G20 leaders arrive at the summit due to start later today. Now, remember, it is one of the most difficult meetings in recent memory, with the trade being the most pressing issue when it comes to the global factors. Our colleague from CNBC filed this report from Argentina itself.
World leaders gathering in Buenos Aires, Argentina on the eve of the G20 summit here in South America. This will be the first time the G20 has been in South America. It's also going to be the first time that President Donald Trump has traveled to South America. So much focus on the president and the president of China, Xi Jinping, and whether or not they can cut a deal. But of course, President Trump will be meeting with as many as 8 foreign leaders during the course of his visit here. The question with the United States and China is, can they break that trade tension that's happened over the course of the past 8 to 9 months or so? That situation worsening with the rhetoric increasing on both sides. Global financial markets have been focused on this G20 event as the place where we could see a breakthrough for a deal. But skeptics suggest that maybe a deal is not in the offing here. Maybe the best that global financial markets can hope for here is simply a trade truce in which both sides would agree to stop raising tariffs on each other. A lot of other storylines to watch here at the G20, of course, including Saudi Arabia. Mohammed bin Salman is going to be here. The EU officials are concerned that there might be new tariffs coming from the United States. And then, of course, North America, that trade pact recently agreed to by the United States, Canada, and Mexico, that could be signed here on the sidelines of the G20 as well. So a lot to watch for over the next 48 hours through Saturday night. And that's when we expect to see that big dinner between Xi Jinping and President Donald Trump.
Well, however, some mixed messages came in from Donald Trump on the potential call with China. Now, on one hand, he says he's close to reaching a deal. And on the other hand, he is also bringing in China hawk Peter Navarro to the dinner. Eunice Yoon joins in with more. Well, Eunice, we know that Donald Trump likes to keep people guessing. So is this a negotiation tactic?
It certainly looks like that. But as as we were just talking about, President Trump definitely likes to keep everyone guessing. And I think that would include the Chinese as to whether or not he's actually going to follow through on a trade deal. So he was speaking to reporters before he got on the plane to Argentina. And this is what he said.
I think we're very close to doing something with China, but I don't know that I want to do it, because what we have right now is billions and billions of dollars coming into the United States in the form of tariffs or taxes. So I really don't know, but I will tell you that I think China wants to make a deal. I'm open to making a deal, but frankly, I like the deal we have right now.
So President Trump is expected to sit down for dinner with President Xi on Saturday night. The list of attendees is still reportedly being finalized. However, CNBC has learned that White House advisor Peter Navarro is going to be at that dinner, and that has raised a lot of eyebrows and concerns that that might mean that there won't be any sort of deal. And that's because Peter Navarro is really seen as a fierce critic of China, and from the Chinese perspective, seen as somebody who doesn't necessarily want to see a trade deal, but instead wants to contain China. So there's been a lot of speculation as to exactly what the two sides will be able to achieve. The Wall Street Journal was reporting that the two were talking about some sort of architecture for a trade arrangement that, once that architecture is put in place, would be able to help stave off tariffs from Washington at least until the spring.
Well, yes, President Donald Trump definitely keeping us guessing with his latest statements. But we talked to a whole host of experts on the matter on what they are expecting from this crucial Trump-Xi meeting in Argentina over the weekend. Hear out what they had to say.
I think the stakes are high in that the market's now sort of pricing in some sort of a ceasefire, some sort of a soft agreement. And if we don't get that, then obviously there'll be a lot of disappointment. But I suspect that we get some sort of a ceasefire. But I think the bigger story here is this, that no matter what happens at the G20 this weekend, we are in an extended era of deglobalization, which really means that this is death by 1,000 cuts. So it's not as if there's one event which is going to change things either for the better or for the worse. But this is a steady war which is going to play itself out over the next few years. And we've got to think about the implications of that for the global economy and who could possibly lose and even benefit from this era of deglobalization.
I think that everyone would win if we are able to get into a position where we hold off on further tariffs. Better yet, remove the tariffs that are in place associated with the 301 activity. The 232 associated with steel and aluminum, that's not a China-specific or a bilateral issue. But the 301 tariffs are China-specific, and what would be success is getting rid of those tariffs, or at least postponing the imposition of additional tariffs.
The president is keeping everyone guessing, and he's basically preparing the public and the business community, not just in America, but all around the world, for no deal. Because he's saying that while he wants to engage in a deal with China, he's very happy with the way things are right now. And so we're just going to have to see. At most, because there have been really no substantive negotiations over the last several weeks or months, at most, there might be an agreement for the president to withhold further tariffs, not adding to the tariffs already imposed on some $250 billion worth of goods coming from China, in exchange for discussions over the next several months.
Meanwhile, President Trump has abruptly cancelled his meeting with Russian President Putin 2 days before they were scheduled to sit down on the sidelines of the G20 summit. And the meeting was called off on Russia's refusal to release Ukrainian Navy ships and sailors that were seized during a maritime confrontation between the two countries on Sunday.
Okay, let's move on and see how the Wall Street closed yesterday. The market there ended lower as investors shifted attention to the meeting between President Donald Trump and Chinese President Xi Jinping amid some skepticism whether the two leaders can reach a consensus on trade. Now, major indices traded higher following the release of the Federal Reserve minutes, as well as the comments coming in from President Donald Trump. But they gave up most of the gains by close, given the fact it was understood that White House advisor Peter Navarro would also be attending the dinner. The Dow Jones snapped a 3-day winning streak. The S&P 500 slipped a tad bit, down about 0.2%, and Nasdaq as well dropped 0.25%. CNBC's Eric Shemi gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks slightly lower on the session. The Dow off 27 points, the S&P down 5, and the Nasdaq lower by 18. The United States and China are reportedly exploring a trade pact that would stop additional tariffs from Washington in exchange for new talks to bring about major changes to China's economic policies. That's according to the Wall Street Journal. The report, citing officials from both countries' governments, comes as the G20 summit gets set to kick off in Argentina and says both sides are eager to curb mounting tensions between the world's two largest economies. Meanwhile, the number of Americans filing for unemployment benefits climbed to a 6-month high last week. The data could raise concerns that the labor market may be slowing. It's the highest level of claims since mid-May, the Labor Department said. And yet another Wall Street firm cutting its expectations for Apple amid fears of sluggish iPhone demand. Canaccord Genuity reducing its 12-month price target for the stock and lowering its 2019 and 2020 earnings estimates. Shares of Apple are slightly lower today and down more than 20% over the last 2 months. That's the action from the U.S. market. Back to you in Mumbai.
Well, on that note, let's also hear out some market experts what they make of the Fed minutes and also the outlook for the U.S. markets going ahead.
The yield curve steepened briefly. We had gold prices rally. The dollar softened. And as you know, equities up massively. The market is right. Economists, as per usual, are wrong. This was a game changer. Neutral rate is an absurd concept. It's a unicorn rate. It doesn't exist. The housing market is telling us right now, as I've argued for some time, we're already past neutral. So the Fed needs to really recalibrate its thought process, what it watches. It needs to stop raising rates, let the balance sheet unwind, and let there be some price discovery in financial markets to the extent that's possible.
There are a couple events that are going to be very binary in the next month. And people are looking, whether it's 2 rate hikes or 4 rate hikes, that's meaningful. And the way that the market has been reacting in the last 9 months, I would say since February, to news is the market is reacting to sort of news on the margin, and the market is reacting to really meaningful news. And so I think we have to be careful.
Well, European markets, they ended mostly higher yesterday. Remember, the UK banks, they passed the Brexit stress test. So that was good news. The FTSE and the CAC, both of them ended with some gains, while the DAX was a relative underperformer in yesterday's trading session, ending with a bit of a mild negative bias. Now, all attention shifts over the weekend to the G20 summit and what's going to come out of there. For starters, we know that Peter Navarro is going to be out there, and he's the China hawk. So that's not going to be great news. But let's see what happens at that dinner.
Okay, yes, all eyes on that particular dinner, but let's move on and take a look at the currency space as well, because the dollar index is currently trading below the 97 mark. Remember, we had seen some strength in the dollar index in the previous session on comments by the Federal Reserve chief that was seen as a sign that the rising trend in US rates may be coming to a close. And the all-important commodity focus, then crude oil prices, they rebounded a tad bit from yesterday's session lows. This after industry sources said that Russia had accepted the need to cut production, and together with the OPEC ahead of the meeting next week. However, Brent crude prices, even after the bounce that we've seen overnight, is still trading below the $60 per barrel mark.